Hey everyone, and welcome back. Today we're going to be doing a deep dive into some pretty big changes happening with the Dow Jones Industrial Average.
Yeah.
I mean, you've probably seen the headlines already.
Yeah.
Nvidia and Sherwin-Williams are in, Intel and Dow Inc. are out.
Yeah.
But we're going way beyond just kind of like the surface level stuff to try and understand what does this actually mean for the market? Like, how do these changes reflect bigger trends that are happening?
Right.
And we have a great article from the Motley that's going to help us answer those questions today.
Yeah, I think it's really fascinating, right? The Dow is over 100 years old.
Right.
But it's always evolving. It's always trying to keep up with, the market and how the market's changing.
Yeah, yeah. And I think that's what's really interesting about this. It's not just like companies are just like switching places for no reason.
No.
There are these bigger forces at play. So before we jump into the specifics, can you just give us a quick refresher on what makes the Dow so different from, some of the other indexes that we talk about a lot, like the S&P 500 or the NASDAQ?
Yeah, so the Dow is price weighted.
Okay.
And what that means is that a company's influence on the index is based on its stock price.
Got it.
Not its market cap. So you can have a company with a really high stock price, but it's not actually that big of a company.
Right.
That could have a lot of influence on the Dow.
See, that's always been something that I've never quite understood. Like, why does the Dow still use this price-weighted system? It seems like it could.
Well, there are a lot of reasons. I mean, some people say it's outdated.
Okay.
That it leads to, situations where a few stocks that have a high price can really have an outsized influence on the index as a whole.
Okay.
But you have to remember, the Dow was created in 1896.
Wow.
And back then, it was actually really hard to calculate market cap. So using stock price was like a practical solution.
So it was just kind of like out of necessity.
Yeah. Yeah, it was a lot easier to do it that way.
Interesting.
And, even though it has its quirks, the Dow is such an important part of the market. Like, changing it now would be a huge deal.
Yeah, I can see that. But how does this price weighting actually play into the latest additions to the Dow, like with Nvidia and Sherwin-Williams?
Well, both of those companies had stock splits recently.
Right.
And without those splits, their stock prices would have been way too high to even be considered for the Dow.
Oh, interesting.
Like, imagine trying to put this giant puzzle piece into a space that's just way too small.
Gotcha. So stock splits, which usually don't really change a company's overall value that much, actually become really important when you're talking about the Dow.
Exactly. It's one of the things that makes the Dow so unique, right? It kind of plays by a different set of rules.
Okay.
And in this case, those rules kind of open the door for these two companies that are, I would say, very much on the cutting edge of the market right now.
Absolutely. And speaking of cutting edge, we have to talk about the fact that tech is having a huge moment.
Yes.
Even on an index like the Dow, which has so much history and tradition, it's like tech is taking center stage.
Yeah, and I think the fact that Intel got replaced with Nvidia is really symbolic. I mean, Intel used to be a giant, but they've been having some struggles lately.
Yeah.
And Nvidia, they're all about AI and gaming and high-performance computing. They're on this huge growth trajectory.
Right.
And it's almost like the Dow is acknowledging that shift, right? Moving away from the old guard and embracing the companies that are driving the future.
Yeah, yeah. It's a pretty big change. I mean, you're essentially swapping out one chip maker for another.
Right.
But it's saying a lot about where the market sees the most potential.
Yeah, it's like, if you think about it, it's like swapping out like a vintage car for a high-powered electric vehicle.
Yeah.
They're both modes of transportation, but they represent different eras of technology.
Right.
And the Dow is clearly saying, we're ready for that electric vehicle age.
I like that analogy. So Nvidia being included, that makes a lot of sense.
Right.
Then you have Sherwin-Williams. And I think a lot of people are like, wait, isn't that just like paint?
Yeah.
How do they fit into this whole picture of like a tech-driven market?
Yeah. And that's where things get really interesting.
Okay.
So on the surface, you might think, okay, they make paint. What are they doing in the Dow?
Right, right.
But if you dig a little deeper, they are so much more than just a paint company.
Okay. Tell me more.
So think about it. They make coatings for, like, everything. Bridges, wind turbines, airplanes, industrial equipment. They're involved in all these industries that are vital to, the way our economy works today.
Okay.
And they're constantly innovating, coming up with new coatings that are more durable, more sustainable, and better performing.
So are you saying they're like a sneaky tech company?
Kind of, yeah. And I think the fact that they're in the Dow now shows that it's not just looking at the big, obvious tech giants anymore.
Okay.
It's recognizing the value of companies that are kind of quietly innovating and driving growth in other sectors.
That's a great point. Sometimes the biggest growth doesn't come from the places that you'd expect.
Absolutely. And Sherwin-Williams, they're a great example of that.
Yeah, and they're replacing Dow Inc., which is a pretty big chemical company.
Right.
So it's not like they're coming from completely out of nowhere.
Exactly.
Yeah.
But even within the chemical industry, there are companies that are, I would say, more forward-thinking.
Okay.
And the fact that the Dow chose Sherwin-Williams over Dow Inc. shows that they're not just looking for a long history. They're looking for companies that are really positioned for growth in the future.
Yeah. It's like they're saying, we're not just about preserving the past, we're about, like, shaping the future.
Exactly. And that brings up another interesting shift we're seeing in the Dow. A shift in focus from dividends to growth.
Oh, okay. Now, I'm really interested. Tell me more about this shift.
Well, traditionally, the Dow has been known for its blue chip companies.
Right.
These are, established companies, stable companies with a long history of paying dividends.
Okay.
But with the additions of companies like Amazon, which doesn't pay a dividend at all,
Right.
and companies like Nvidia and Salesforce, which have relatively low dividend yields,
Okay.
it seems like the Dow is moving away from that traditional focus on dividends.
So is it becoming a little bit more, like, risky, a little bit more focused on growth, even if it means potentially?
Yeah, it's possible, and I think it reflects what's happening in the market as a whole, right? Investors are looking for growth potential, even if it comes with more risk.
Right.
And the Dow seems to be mirroring that trend.
Yeah, that makes sense. But it does make you wonder, what does this actually mean for investors who are, maybe looking for that stability? Yeah.
And that dividend income. Is the Dow even still a good option for them? Or do they need to be looking somewhere else?
That's a great question. And honestly, it's something that we're going to explore more in the next part of our deep dive.
Okay, so stay tuned, everybody. We're just getting started.
This is just the beginning.
Yeah, exactly.
There's a lot more to uncover.
Lots more to come.
Yeah.
All right, we'll be back soon.
All right, so we've been talking about how the Dow is evolving, kind of shifting towards this growth and tech focus. But I'm curious, with all these changes, does the Dow even reflect the broader market anymore?
That's a really good question.
Or is it becoming more like a niche index? Like, is it basically just tech with like a few other things sprinkled in?
Yeah, I mean, it's not a simple answer, right? The Dow is only 30 companies.
Right.
So, it's always been kind of different from the S&P 500, which has 500.
Of course.
Or the NASDAQ, which has thousands.
Right.
So it's never been a perfect mirror
Right.
of the entire market.
But it's always had this kind of like iconic status, like, how did the Dow do today? It was basically the same as asking, how did the market do today?
Right. And in some ways, it still is.
Okay.
It gives us a snapshot of what's happening. But with these additions, it's definitely aligning more with that growth-focused, tech-driven part of the market.
So let's say I'm an investor.
Sure.
What does this all mean for me? Should I be worried that the Dow is becoming, more volatile? Or should I be excited that it's capturing more of this high growth potential?
It really depends on your goals as an investor.
Okay.
If you're looking for steady income from dividends,
Right.
the Dow might not be the best place to look anymore.
Yeah.
You might need to look beyond those big name indexes.
Right.
Maybe consider some more specialized funds or even individual stocks.
So those classic dividend-paying companies, they're still out there.
Yeah.
They're just not necessarily in the Dow anymore.
That's a great way to put it.
Okay.
But on the other hand, if you're more comfortable with a little bit of risk and you're really excited about the potential of tech and, those other high growth sectors, these changes to the Dow could be a really good thing.
It's almost like the Dow is kind of getting this makeover.
Right.
It's becoming a little bit more like the Wild West of the NASDAQ, but it still has that blue chip credibility attached to it.
Right. Exactly. It's like this hybrid of the old and the new.
Yeah.
And it reflects this tension that we're seeing in the market.
Right. Like this tension between, the stability of those traditional companies and the dynamism of these newcomers, the innovators.
Right.
It makes you wonder, what's next for the Dow?
I know.
I mean, is it going to keep moving further into tech, or are we going to see other sectors start to become more important?
That's the big question. And, the Dow is constantly under review. It's always being adjusted to reflect the market. So who knows what's going to happen in the next 5-10 years?
Yeah.
Maybe we'll see more companies like Sherwin-Williams, those companies that are kind of under the radar, leading their industries, but poised for huge growth.
It's like they're sneaking in under the cover of just paint.
Yeah.
And then, bam.
Yeah, exactly.
They're this major player in the Dow.
And that's why it's so important to, really dig deeper.
Yeah.
Look beyond the headlines and really understand what these companies are doing, what their growth prospects are, how they fit into the bigger picture of the market.
Yeah, it's not just about name recognition or, what industry they're in.
Right.
It's about understanding those fundamentals and their potential.
Exactly.
Doing your research and not just getting caught up in the hype.
Absolutely. And, this brings us back to something we talked about earlier. Even with these changes, the Dow isn't a perfect reflection of the overall market. It's just one piece of the puzzle.
So even though the Dow might be getting this tech makeover, that doesn't mean every sector is booming or that everybody should just be putting all their money into tech stocks.
Exactly.
Yeah.
The Dow is an interesting indicator, but it's important to remember it's just one data point.
Right.
To really understand the market, you need to look at the bigger picture, consider different viewpoints, and most importantly, do your research.
Yeah, and let's be honest, that can be pretty overwhelming sometimes.
Oh, absolutely.
I mean, there's so much information out there, so many different opinions. It's hard to know where to even start.
It can be really tough, and that's where having a guide can be so helpful.
Like, say, a friendly podcast duo who can break things down into bite-sized pieces.
Exactly. We can't give specific investment advice,
of course,
but we can help you understand the big trends, the important companies to watch, and the things to be careful of.
Yeah. We can help you become a more informed and more confident investor. Even when the market throws these curveballs, like, these big Dow shakeups.
Absolutely. And speaking of curveballs, before we move on, I want to leave you with one final thought that kind of builds on what we've been discussing.
Okay, hit me with it.
So we've talked a lot about the Dow's shift towards growth and tech and how that could mean more volatility. But here's the thing.
Okay.
Even within those high-growth sectors, there are companies that still prioritize stability and dividends.
Okay.
They might not be growing as fast as, say, Nvidia, but they offer a different kind of value.
So it's not like this all-or-nothing situation. You can still find those steady companies, even in the middle of this, tech boom.
You got it. And that's why it's so important to look beyond the labels and really understand what each company is about.
Right.
Don't assume that just because it's a tech company, it means high growth and volatility, or that, an older company is automatically going to be slow and steady.
Right. There's a whole spectrum in between.
Absolutely. You have to know what you're looking for and where to find it.
Yeah. And that's what makes the market so interesting.
I know.
And so challenging. But hey, that's why we're here.
That's right.
To help you figure it all out.
One step at a time.
One deep dive at a time. It's interesting, right? We always hear that, investing shouldn't be a one-size-fits-all approach. But then so much of the conversation focuses on these massive indexes, these huge things. And it's cool to hear you talk about how important it is to to think about your individual goals and maybe risk tolerance.
It's so important because it's just you wouldn't wear the same outfit for every occasion.
Right.
You're not going to use the same investment strategy for every situation.
Exactly. It's like you're creating your own personal investing recipe.
Yeah.
What are your ingredients?
Yeah.
What kind of flavor are you going for? Are you all about that spicy high growth? Or do you want something a little more mellow and balanced?
Yeah, I love that. And just like with cooking, it's about finding that right mix.
Yeah.
Maybe you want a little bit of both.
Right.
A little high growth to keep things exciting.
Yeah.
But also some of those sired dividend pairs, for that base.
Yeah, that foundation.
Exactly.
Yeah. Yeah. You don't have to pick just one.
Nope.
You can have it all as long as you're strategic about it.
Exactly.
And that's where that research comes in, right? Really understanding the companies that you're thinking about. What are their growth prospects? What's their history with dividends?
Yeah, how do they fit into your plan?
Right. It all goes back to what you were saying before about, like, not just chasing headlines or whatever the latest trend is.
Yeah.
It's about thinking for yourself, doing your research, and making those choices. Yes.
That work for you, that you're comfortable with?
I completely agree. And remember, investing is a journey.
Right.
It's not a destination.
Yeah.
It's all about learning, adapting, changing your approach when you need to.
That's what we're trying to do here, right? Help people navigate that journey.
Yeah.
And maybe even, like, have a little fun along the way.
Right.
So as we're wrapping up this deep dive into, the Dow and all these changes that are happening, what's your final thought for our listeners? What should we be taking away from all this?
Well, even though the Dow is, changing the market, like always, is unpredictable.
Right.
I think the main takeaway is this. There's always opportunity out there.
Okay.
It's just about, like, being open to those possibilities.
Yeah.
Knowing what you're looking for.
And never stop learning. Right. The more you know, the better decisions you'll make.
Absolutely.
About your financial future.
So keep exploring, keep asking questions, and keep diving deep. We'll be back soon with another deep dive to help you make sense of the world of investing.